The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off about 24 minutes to go until the opening bell. We get CPI data out this morning, and right now you're looking at an S&P up by 4 points. You see the volatility on that 8:30 number. CPI inflation data comes in a little bit light. The market enjoys that. We get higher price. You get a little bit of lower yield. The S&P's positive by 5 points, trading at 7,021. That's an all-time high in the futures on that spike, 7,036. NASDAQ 100, we're about 350 points, maybe 400 points away from all-time highs right now. We're back in the green. We were in the red this morning. We're up by 10 points at 25,967. You get the Russell right now, positive by 10 points. You spiked to 2677. We're trading at 2658, positive by about 1/3%. And the Dow slightly in the red, 49,802. We hit 49,902. That is a high as well. Yeah, that's a high within 100 points of 50,000 on the Dow. We jump over to yields this morning. The 10-year, 4.18. Okay, 4.18. The yield on the 10-year. We're positive by 2 ticks at 112.07. So a little bit of higher price, lower yield. If inflation isn't a problem, then the Fed's going to cut, right? And if the Fed's going to cut, then in theory, you should have lower rates. So if inflation is not a problem, rates going down a bit. Dollar, little bit of weakness on that number. The dollar's at 98.94 right now. And we jump to metals. So on a little bit of dollar weakness, gold, positive yet again. Up by 9 to 46.24 right now. In the overnight session, we were at about 45.80. And you had all-time highs yesterday of 46.40. Silver holding up well. You talk about it, man. Look at this run. $88 on the dot. Whoo-wee. We're up $15 from where we were on Thursday. You were trading at $30 like 6 months ago. Silver continuing to run, continuing to exceed everything out there. Silver's up 3.5%. Gold's up 2/10%. Get that? Silver's up almost 4%. Gold is up 0.2%. Platinum up 1.5% right now, up $33 at 24.14. You jump over to copper, up 1% right now at 6.08. You jump over the VIX. We got a 14 handle yet again. There's very little volatility in this market. Let's jump over to some of the CPI numbers. So we got bank earnings this morning as well. You got JP Morgan out there. We got Delta, and we got inflation data. And yeah, it's a little bit of a miss. Core CPI. 0.2% on a monthly basis, okay? You get into the numbers. $2.6 annually. This is core. That's the Fed's preferred inflation gauge, folks, okay? This is what they prefer. They prefer, This is the CPI, not the PCE, but core nonetheless. They prefer the PCE. I was going to say, this is the CPI, okay? And that's where owner's equivalent rent's a lot bigger component of this than the PCE. So the Fed thinks that the PCE does a better job of reflecting the inflation that they can control as well. But on a headline basis, you come in at 0.3, and on an annual basis, 2.7. The target's 2%, okay? But shelter. A key element of stickiness increased 0.4%. That was the biggest item for the monthly increase. Now, I'm going to pull this one up, okay? So, as I'm saying here, shelter increased 0.4%, the biggest item for the monthly increase, okay? And then here's a great example, folks, all right? In terms of when you look at shelter, I always pull this one up because there's nothing like a quick chart to really show you what matters. We just got the CPI, okay, the one on the left. The Fed prefers the PCE. The one in the yellow here, that's housing. That's the one going up the most on that report. And that's the CPI, and this is the PCE. Healthcare, a much bigger component of the PCE versus when you're looking at housing. So housing is going to decrease. So if the Fed's looking at PCE, maybe that does give them the room for additional cuts than what was priced in. And the greatest example, right? These are two, we live in inflationary times right now, folks. So we all have gotten quite an education in terms of statistics. I mean, we used to get these numbers. These numbers meant nothing for the better part of almost 20 or 30 years, right? I mean, we have not had something like this. We've had numbers where you had headline CPI numbers that went bonkers, mostly because of oil spikes. Okay, we haven't had this type of inflation since the 80s in terms of the acceleration during COVID. So we all got an education of how this works. And the best way to analyze it, okay, is to think about it, I should say. Consumer Price Index is CPI, and you're the consumer, but personal consumption expenditure, where the difference is that there are many items that we consume that we don't pay for ourselves. The best example of that is your health care you might receive from your employment. You don't actually pay for that yourself, right? Your boss, your company, they're the one that negotiates that plan. They're the one that pays for it. And then they pass on the benefit to consume that to their workers. And so as a result, that will trickle down, okay, into cost, because guess what? If a job is paying for that for you, well, maybe they're going to pay you a little bit less in salary, right? Whatever it's going to be. You're consuming that. And on the PCE, healthcare represents 21% of that entire pie. And on CPI, it's only 9%. Housing is more than double on CPI, 32% versus only 15% in PCE. Financial, another big one, right? You don't think you're paying for those free trades, folks? You don't think you're paying for whatever it is, right? Well, you better believe you are. 8% of the PCE is financial, only 3% of the CPI, okay? And then you go the other way, transportation, more on the heavy side versus PCE, and energy as well. But that stuck out, thought I'd comment on it. When you look at shelter, a key element of the stickiness, well, that's not going to contribute when you look across the board to the PCE, which is what the Fed prefers. So you get that data this morning, and we have markets enjoying, less inflation than we thought, and the prospects of future cuts. We'll see what happens with Powell, of course. But nonetheless, you got a little bit of lower yield. You got a little bit of dollar weakness, ever so little, right? And we have markets rejoicing a bit. All-time highs, folks. JP Morgan, jump around. So we'll jump into their numbers after the break, but JP Morgan flat right now to 324. Been a heck of a run for these banks. From the October 2023 lows to the April lows this year. Last year now, 2025. But JP Morgan on their numbers right now, basically flat. We'll get into those after the break, and you jump over to Delta. Different story. Down about $3 for Delta shares to $68 and change from 71 on their numbers, but we got green across the board right now. S&Ps, we're in record territory, up by 7 points, 7,023. You got the Dow. We might get 7,000 today. We might get 50,000 in the Dow at the same time. We got about 15 minutes to go until the opening bell. Stay tuned, folks. Come right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Back, folks. You get the S&Ps up by 7 right now. We jump back to JP Morgan. So right now, you're barely in the positive by about $1. JP Morgan trading at 325. We jump over to their numbers right now. You got JP Morgan. So they had some big numbers a year ago. They pretty much come in line, but getting into the numbers right now. How about expecting to earn $103 billion in net interest income this year? Yeah. $103 billion in net interest income is what JP Morgan is going to earn this year. The biggest bank generated $2.35 billion in underwriting and advising in the final months of 2025, down 5%. That's for the quarter, of course, is the number there. $57 billion in net income for 2025, but falls short of the 2024 record. Trading revenue, $8.24 billion, ahead of even the highest estimates. They expect to spend $105 billion this year. Not bad when you can cover almost all the costs with net interest income. So they had a 2% decline in debt underwriting fees. Market was looking for a 20% gain. Whew. Quite a number, but it's been quite a performance. Now it's time to live up to it. You just ran from 200 to 337, and right now we're slightly positive as they kick off the earnings season. We jump over to Delta. quite a run as well. We're right at the highs of earlier the year, and we're going to open at $67. So you're going to open slightly below that level. You're basically opening at where we were at the end of 2024. It's going to be interesting to see on Delta here. All of their growth is coming from the high end here. Eventually, they're going to have to make a little money from the cabin. Okay, not necessarily, but yeah. Main cabin ticket revenue falling 7% in the fourth quarter from a year earlier, while premium ticket revenue rose 9%. They're making more at 5.7. Okay, that segment has now overtaken standard coach. Yeah. Amazing. Bookings are strong from both leisure customers and corporate travelers in the first few days of the year, is what they say. They make $1.55 versus $1.53, and revenue 14.6 versus 14.69. We're looking at our seat growth in the coming year. Effectively, none of our growth in seats will be in the main cabin. Virtually all will be in the premium sector. Is it eventually just going to be a shift to the cabins just going to keep getting shrunk, and they're just going to keep putting more expensive business and first class up there? At that type of a growth, man, main cabin, look at it's not even, as in you have a decline of 7% on the main cabin, and you have a rise of 9% in the premium. That's a 16% divergence in terms of revenue on the upper and the lower. And yeah, you see it happen with many companies. Walmart, right, talking about their growth is coming from people who are making six figures, etc. It's a slight shift to that. The haves and the have-nots, man. You're struggling check to check. You got no assets right now that are appreciating as inflation is still running at 2.7% on an annual basis. Or 6 years since COVID, folks. 6 years since COVID. Okay, I was looking at a house yesterday, right? Run these types of numbers, okay? Looking at a house yesterday, sells for $355,000 in April of 2020, right? Right as COVID hits, there's no real acceleration in the real estate prices in April. Everyone's still sorting out everything, okay? Somebody jumps out of the market as COVID hits. It sells for $350,000. It's 6 years since then now, okay? And we all know what happened for inflation when you talk about 2021, 22, 23 especially, and we're still at 2.7%. And what's happening is you're compounding, right, the numbers that we had during COVID, as in inflation. If you take a $355,000 house, folks, okay, and all you do is you increase its value by 8%. Okay, now that's not how it worked, right? Especially in Florida, there's a lot of homes that went up by like 100% in the 2-year period from 2020 to 2022, right? And then in 2023, and then we've just stayed there for 4 years. We've had a consolidation, okay? It really hasn't pulled back. You haven't had quite an acceleration to the upside since then as well. But if you just look at a $355,000 house and you increase the value of that home by 7 to 8% per year, that home is now worth $575,000 just on that accord. I'd argue that it's going higher. There's a lot of homes right now, okay, because that is only about a 70% increase in the price, right? So if you go up 8% a year for 5 years, when you compound it, you get to about 70%. A lot of homes right now from where you were pre-COVID, right, beginning of 2020, a lot of homes are double the price. They've been double the price for some time from that area. You had a $300,000 house, coming towards the end of 2019, that could realistically be worth $600,000 right now, especially when you're talking about in areas where there's constant, wind at your back like Florida. But we're at 6 years right now. Okay, so 6 years when you start pushing those numbers, man. I was running that yesterday. Yeah, you better believe that those numbers are going up when you talk about the prices, inflation, real estate. Time flies, folks. That's what happens. You got to factor in, right? You're paying taxes, you're paying insurance, you're renovating a house over 6 years, man. You got things that are breaking over that period of time. And so Yeah, hey. All right. Let's jump to some of the other action going on. That's not the one. Forgive me 1 second. Okay, here we go. So, speaking of mortgages, this is where it gets so unfortunate, right? The idea is coming out right now, Mr. Ackman, okay? Of course, there's a million things that you can do to make mortgages for homeowners less attractive to the homeowner and more attractive to banks to lower the interest rate, okay? This one, they're not even sure it's going to work, and whether it would be so marginal it might not even be felt, okay? But he just wants to create an optionality for everything. The last thing we want is to disincentivize people being able to pay for their home early, folks. We have enough out there in this government that that's not what we need to do. When people are trying to buy a home, that will say, we'll give you a better rate as long as you promise to never pay it down early and make sure that debt lasts for 30 years. And I get it if you're a bank. We're coming back for the open.
You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. We got equities digesting that CPI number. We got a little volatility. There's your number on 8:30, and we're giving back some of it. NASDAQ rolls into right on the open. We get the S&Ps right now positive by 1 point. Dow off by 48 points, and you got the Russell up by 8. We jump to the dollar right now. DXY, 98.94. I mean, pretty muted response on these CPI numbers. The market takes it in stride, and all things considered, the numbers are pretty close to in line. You jump over yields, the 10-year right now. There we go. That's a move for you. The 10-year up by 6 ticks, 112.10. We're at 4.17 right now on the 10-year. And yeah, so jumping back to this story, okay, and I get it. This is how it works. Of course it is, right? If you're in the financial business, you know that's how it works, okay? If people have the option to prepay their loans, that's basically it's a great option. You always say it, right? Right now, folks, I think rates are going to be under pressure, okay? So what you could do is you could go out, you could buy a house right now that you qualify for. Worst case scenario, and of course, anytime you lock in, right? What could happen? Well, rates could go up, which could hurt the real estate market, and then maybe the property that you bought isn't worth what you bought. Okay, of course, real estate fluctuates. But it's pretty cool that you lock in that rate for 30 years, and then you have the option to refinance that mortgage at any time and get a lower cost mortgage, okay, at a lower rate. That's a risk to the bank, because imagine they're giving you a rate that if rates drop, you get to refinance it, but they're locked in. It's a one-way option. I get it. But this is all about people being able to live in homes and own that home, and now eliminating the ability for them to pay it down early without facing monumental fees that are on top of it. There's other ways throughout our government. You know, we pass budgets over 10 years that are going to add $4 trillion, and everyone just says, hope for better, right? Let's just hope the economy does better and we'll be fine. And then the same people come out and say the only way that we can pass anything to do with home ownership is that we'll have 50-year mortgages, and then we'll assess extra fines if people pay their mortgages early. I mean, why not? You know what's going to be cheaper, folks? A 50-year mortgage with a prepayment penalty. Let's make it a 100-year mortgage, and let's jack up it's just unfortunate. And the best part about this, as in how farcical their notion is, okay, is that, let's get down to the end here, okay? Wells Fargo, in a Monday note to clients, said that mortgages with prepayment penalties might give consumers the option to borrow at a lower rate, but the difference would be small after accounting for all logistical hurdles. There's no empirical evidence whatsoever that suggests more prepayment penalty obligations correspond to significantly lower mortgage rates. Such penalties are a terrible position to put the borrower into. Seems like a multi-billionaire might be able to encompass that, okay? Especially as the government passes budgets that are going to add $4 trillion to the debt, unless everything happens that's not supposed to, right? We can always have growth that's not expected, okay? And that's one of the greatest avenues of home ownership is what we have. Okay, they don't have this type of home ownership in other countries. We are superior in that, okay? And we can afford it, and people need that ability. And so it's unfortunate to see people, who have more money than God ever intended, out there saying that the best way to allow people to own a home is making sure we penalize them if they ever want to pay off that debt that follows them for decades early. I mean, I'm sure he rests easily at night pushing policies out there like that, making sure that people will be penalized if they pay off their home mortgage early. Everybody wants a home paid for. That's like, right? I remember I was at Villanova. I had an accounting professor. Now, this is an accounting professor. Great guy. And he talked about debt, of course, right? He talked about debt. He talked about all this. And I still remember the day he came into the class, and it was the day he had paid off his mortgage. And this guy, he's brilliant guy, great guy, Villanova, tenured professor, young guy relative, for a tenured professor who's paying off his mortgage. And he was so happy because he just talked about how he would put in a little bit extra in there every so often, just the ability to own his home without a mortgage on it, all this stuff. It's an American dream, right? You own your home. You own the land you live on. And it's unfortunate that the richest of the rich, that their ideas out there, okay, are we lower taxes, pass a budget that adds $4 trillion over the next 10 years, and then the best idea they can come up with for people to buy a home is that we make sure we just penalize them if they pay for it early. It's not even going to matter. Banks put out, this isn't even a big difference. Imagine making a proposition like that. It's one thing if that would cut and that would just change the market, right? It doesn't change anything. You're talking about a menial difference that'll penalize people on the most instrumental act of just paying down the debt that they live under. Ackman. Maybe he should go play some more pro tennis. That guy. He wants to be a pro tennis player as a billionaire and tell everybody the recipe to success of home ownership is penalizing people if they pay for their mortgages early. I know, right? All right. We talked about the CPI. Yeah, let's talk about Paramount. So they're bringing it, that's for sure. They plan a proxy fight to push the hostile Warner bid. Now, from everything reported, outside of the trust concerns, okay, it seems like the Netflix bid is for a bigger price, right? And the Netflix bid, of course, is for not the entire piece of Warner Brothers, right? And you're going to get the cable channels who are going to get sold off separately. So Netflix's bid of $28.75 is actually superior to Paramount Skydance's bid of $30 and change, because when you add in the cable companies, their bid's poor, right? So when you look at this, the risk really comes down to the antitrust concerns, and it should, because Netflix buying. So they're the number 1 and 3 streamers, Netflix and Warner Brothers, okay, Max. The number 2 streamer is Prime. They're not a real streamer, okay, in terms of competitive nature for that whole industry competing. The 1 and 3 streamers are combining, Netflix and Warner Brothers. And the number 2 streamer is not a real streamer. They're Amazon. So you have the 2 biggest players out there. And we'll see if that comes out. But nonetheless, Netflix catches a bid with the market right now, but they're paying $100 billion now for that. And Paramount, nothing factored in there. But this is going to take years, man. You got Ellison and his son. Yeah. They're on a tear, and they're going to do everything they can. And they got the money to fight that battle, and it seems like they're going to fight it, man. And we'll see. Maybe they're going to. They said it's not their best and final, so we'll see. But you talk about a give back, man. Paramount flat this morning. We jump over to some of the bigger growth stocks out there. Nvidia flat this morning, down 11 pennies. Apple up by 10 cents right now. Google on the heels of their deal with Apple. Look at this, man. Google's just not stopping. Look at this weekly. Google's up another 1.6% today. Yeah. All right, folks. And make sure, when you got the richest people out there in the world saying maybe the recipe to success is that we make sure people can't pay off their debts early without penalizing them, make sure you just know that they're just not throwing out ideas. All right? They're statements. Yeah. We're coming back, folks.
While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&P's right now up by 5. NASDAQ up by 71. You get the Dow rolling on negative, off by 175 points. You know, it's unfortunate when you get this type of rhetoric, folks. It always just brings out, nonsense, I feel like. Okay? I mean, Albert, I love you, buddy, in the Tiger's Den. But you hear a proposition like that. The ability to pay off your debts early is not a psychological ability. Okay? It's a real ability. Many people pay off their debts early. Penalizing people for paying off their debts early, for trying not to live a life of servitude under debt, is just absolute bananas nonsense. Call it like you see it. And when people who are this rich and powerful throw out ideas like this, hold them accountable too. And when people out there say, geez, what's the big deal? Why do you care that some guy worth $10 billion, okay? Do you know how long it would take you to make $10 billion? About 200,000 years. 200,000 years it would take you. So when this gentleman's grand idea of his $10 billion portfolio, okay, is that the way that we're going to enrich people who can't afford to live in a house is we're going to make sure that we allow banks to never let them to pay off that debt, you should call it like you see it and not give those people the coverage that they so seek when they're worth that much and they make these propositions. The 50-year mortgage. So you're going to have a 50-year mortgage that you're going to get penalized that you prepay for now, right? They're just ideas. No, they're ideas from people who are worth billions of dollars for ways that you can just expand the level of debt people can live under forever and then penalize them when they try and pay off that debt, okay? The people who make excuses for those types of people, folks, are part of the problem. They're not ideas that deserve a rational conversation if you want. You even have banks coming out and saying it's a nonsense idea. You don't think Ackman knows that? You don't think he has the ability to talk to banking executives? Okay? And here's the other part of it, right? Every single thing. We just passed a budget that's going to add $4 trillion over 10 years. And everybody says, well, don't worry, because it sets up American society well enough that it's going to empower people to grow the economy. And then when it comes time to home ownership, right, we have to penalize them for paying the debts early, because if we ever used any type of tax money, that would be what, right? Does that not, the only conversations taking place right now are the fact that we're going to privatize Fannie and Freddie again. That's happening. Already happened. Their money, it's going into the market. Nope, not privatized. It's a government entity, right? That changed pretty quickly. And now, though, 30 years, go to 50 years, and prepayments. It's nonsense coming from a guy worth $10 billion that takes you 200,000 years to make. So, for what we stand for, folks, that's an insulting proposition from one of the richest people in the world to talk about that we're going to start penalizing the poorest people out there that can't afford to own a home if they're fortunate enough to save enough to put money down, and maybe they want to put money onto it every single month, right? Maybe they do, depending on the mortgage rate you get, okay? You run the scenarios, folks. There's plenty of places you can do it online. So, you make light of those comments, and then they get taken seriously, and they shouldn't get taken seriously. There's many other avenues for a guy that's worth $10 billion. His big idea is that we just allow banks to screw people taking mortgages, and then they'll give them a better rate. Imagine, that's the idea. Why don't we just let banks do whatever the heck they want? We'll charge people an arm and a leg if they want to pay off their debts early, and then they'll give them a better interest rate, right? Yeah. And yes, it does matter when someone's worth $10 billion, and their grand idea is that they want people who can't afford a mortgage to get a better rate by making sure the banks penalize them for paying it out early. Okay? Politics is like messing with everybody here. Somehow every idea that was not good 4, 8, 10 years ago is like the greatest idea in the world if the guy you like or the girl you like says it. This is a nonsense idea. The 50-year mortgage was a nonsense idea. That one came from Pulte. Okay? So, Ackman, man. Yeah. Great idea, Bill Ackman. That's good. That's how society is going to benefit the most. And meanwhile, the banks come right out and says that it won't even matter. Okay? So for all the people out there pushing back, it's unfortunate. And you're part of the problem. Why we're not getting real results. And all we're getting right now are ideas that maybe we just penalize people for paying off early. If it was called like it is, then it would matter. And of course it matters, Darth, how much money he has. Because when a guy worth $10 billion says the greatest idea of the world for home ownership is that people get penalized for paying off their debts early, you think it's a coincidence that a guy worth $10 billion, that's his grand idea for home ownership? Because I would bet that people who are struggling don't like the idea that banks are going to get the benefit of paying off the mortgage, that if I want to pay off my mortgage early, that a guy worth $10 billion, his grand idea, because guess what? The guy who's struggling, okay, the guy who's struggling under debt, that's not his idea. And the fact that the banks come right out and say it's a negligible nonsense difference, Ackman knows that, okay? So stand up for what's right, folks, because so often our brains are just muzzled everywhere, okay? It's not a psychological, how does that even make sense, Albert? That you say that it's a meaningless idea and just makes people feel warm and fuzzy? Folks, wake up. Okay? It's not a meaningless idea that makes people feel warm and fuzzy. I don't even know how this stuff exists in people that you come out that strong. So, it's not a psychological idea that makes you feel warm and fuzzy. It does matter that a guy worth $10 billion is saying the path to greatness is that when people buy a mortgage, you can't pay it off early. Okay? Yeah. It's frustrating how much nonsense flies as reality right now. That should get laughed off as a rich man wanting poor people to live in servitude, okay? And that's what that is. It's a man. Folks, you'd have to work for 200,000 years at the median wage to have that man's wealth. 200,000 years. Context is important, folks. I say it often, okay? And, there's a million things. I've said it myself. What about the homestead tax? Why can't we expand the homestead tax to allow people who are living in their homes to actually save on benefits, right? And so, people who disagree with me, who support the president on all ends right now, it's unfortunate, right? Because you come out here, you make passionate, emotional speeches, and they have no actual verbiage to come back at you. They don't have any substance at all. So all they do is highlight how you say things, right? Like I'm too emotional when one of the richest people in the world, their great idea is that poor people are going to live in life of servitude. That's not a critique, folks. If anything, that's just a sign of their weakness, of their actual argument. Okay? So this is the market. This is interest rates. The Fed's under assault. Okay? And now the grand plan is that you're never going to be able to pay off your mortgage if you want to, because the banks will overcharge you. And so you'll be stuck paying that mortgage with the inability to pay it off. And guess what's going to happen? Okay? They're going to try and lure people into that if possible, because who would not want to? Okay? It's like student loans. I would say only a group of people who are underrepresented in Washington, okay, by political players and by lobbyists, like students, could ever be able to take out debt and be able to never wipe it away. And now they're coming after home ownership in the same way. Yeah. All right, we're coming back talking equities, folks. Hey, wake up, pay attention, okay? 50-year mortgages, and you're going to get penalized if you pay it off early. Call it like you see it, folks. Don't let them talk you into some craziness. We're coming back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's right now negative by 7. NASDAQ for 100, slightly in the green. You get the Dow rolling over. Look at this acceleration. Dow off by 321 points. That's a high that we hit this morning, 49,902. And just like that, we're 400 points off that price level right now. You take a look at the heat map. We started off with the Dow, a lot of red right now in the Dow. Financials, Visa off by 3.7%. JP Morgan on their numbers off by 2.3%. Yeah, the banks. Goldman's off by 1.5% right now. American Express 0.6%. You jump over to the NASDAQ 100. We got a few winners out there. Google continuing the run up by 2%. Intel, check it out, up by 5.2%. AMD up by 6.5%. But a lot of red beyond that, man. Apple, Microsoft, NVIDIA. Jump over the S&P 500. Some of the industrials, defense stocks in the green again. RTX, Raytheon up 1.2. Walmart shares. How about Walmart, man? Let's jump to Walmart. Whew. 120. 119.68 to be exact. Whew. Walmart's up 50% from where we were in April. This ain't a growth stock. It's trading almost like a growth stock. Okay? 80 to 120. Let's check on the volume. Walmart looks like it's heading to 135, man. That's a 1-to-1, A to B, C to D. You break above that area in October. You get some decent volume on their last earnings. In November, and this is a weekly, looks like we're going to break above what we were doing in the December highs. A lot of strength in Walmart shares. Put it back to a daily. Some big break yesterday. We'll see if we can get the volume. Going to be tough to exceed what we did yesterday. So keep your eye on that one. You did 49 million on your volume yesterday on Walmart. 49 million. That was a huge day. Look at that day yesterday. Going to be tough to get above that with volume. Nonetheless, Walmart up by 1.3%. All right, folks, thanks so much for tuning in. Stay tuned. We got a man, Basil Chapman. He's coming up next with the Tiger Technicians Hour, folks. Steve Rhodes at 11 o'clock with the Trader's Edge. Fast Market from the Schwab Network at 12. I'm at Larry Pesavento live at 1 o'clock, and I'll be back at 3, folks. Have a great Tuesday. Stay tuned for Basil.